I want to make one quick little turn here and get your thoughts on this, Morgan, but I want to ask Dave first. NASDAQ announced this week it was launching several options on ETFs for gold, silver, natural gas, oil, and long-term treasuries. What's interesting here to us is this will enable traders to trade the contract on the day it expires. These are known as zero-data expiration options. We've covered this before. They can be used to bet on or hedge against extremely short-term market moves. So the options on these used to be just weekly. And now what's happened is they were expiring on Friday. Now NASDAQ has added Wednesday options expirations as well. So SIBO has had tremendous success with its S&P zero-day options. So there's now one expiring every day of the week for the S&P options. Now they're going to these other ones on NASDAQ 2 days a week. So what are we to make of this, Dave? There are worries this is encouraging short-term trading, largely from retail investors.
Yeah,
is this overblown?
I understand the concern about retail investors because absolutely, you can fire up the Robinhood account, you get enormous leverage in zero-data expiration options. You're basically just making a bar bet on what's going to happen to that stock during that day, depending on where you price in. So I understand the concern. When you look at who's actually trading these, which you can't tell perfectly, but you can tease it out, that's not what's going on. This is largely institutions, hedge funds, and day traders using these as short-term leverage speculative vehicles with the extra added bonus that they never have to settle. You can buy it at 10 and sell it at 3, and it never shows up on your book at the end of the day if you're a trader, say, at a prop shop or a hedge fund. So these have become enormous institutional tools for folks that are trying to make strong, opinionated bets about market moves, earnings releases, geopolitical concerns. I think most individual investors probably don't have any business in here at all. They're naturally very speculative because of the inherent leverage.
But isn't 50% of it, 50% of the options trading is now zero-data expiration on the S&Ps?
It's enormous. It's huge. And
doesn't it seem to intuitively appeal to retail investors? Folks, you get up in the morning, you think, where's the S&P going at the end of the day? It's a one-day bet. You settles in cash.
But I think there's a great example here of teaching folks the difference between investing and speculating, right? At the end of the day, if you go buy your gold zero-data expiration option at 10 o'clock, at the end of the day, you've either lost the money you paid in the premium or you made a little money because you got the bet right. And then tomorrow you have to decide again. That's not investing. So I'm cautious about these products because I agree they're problematic for undereducated retail investors that don't know how to trade the options market. But I don't think the tools themselves are inherently breaking the market. Like most market structure things, not a problem until it is.
All right. He and I talk about this endlessly. Morgan, I don't know how much you're following this. Any thoughts you have? Zero-day options accounted for more, like I told him, 50% of all the overall S&P 500 options volume. But you're the great sage here. What, if anything, is this telling you? Are you concerned about this or whatever?
Well, if I'm concerned about it, I think if to the extent that retail investors get into it, you know how it's going to end, at least for the majority of them over time. I'm making a bet on the next 50 years. That's the game that I'm playing as an investor. I hope to own the stocks that I own, God willing, for the next 50 years. So when I hear about people making a bet between now and lunchtime, I understand why it happens, and I don't even criticize it because they're playing a different game than I am. But I think at their core, I think the majority of investors are closer towards wanting to reach a goal that they have many years or decades into the future. And the more times you have games that might push them or entice them into a much shorter period of time, to a one-day period of time, you know how it's going to end for the majority.
Right. Well, that's exactly my concern. I want to push them where he's going and not.
But we ask the markets to do so many things, Bob. Allocate capital, save for retirement, and be the casino for folks that want to take a punt. We ask markets to do
everything to everybody.
Everything and probably too much.